Benjamin Z. Miller, and today we're going to talk about the definition of the debt service coverage ratio. This is used not only in multifamily investing, but in all sorts of lending scenarios. It's a very common financial metric, so if you have never heard of it before, this is something that is important if you're a beginner. So the debt service coverage ratio is the net operating income divided by the total debt service. It's a ratio of the amount of cash that's available to cover a debt. For example, you're going to buy an apartment complex and you've got a certain amount of debt that you have to be able to cover principal and interest, or ideally interest only if you can obtain that. So why is that important? Well, it's important for a few reasons. The first one is that in the calculation of cash flow on a loan in commercial real estate, and in some cases even in residential real estate, people who are interested in purchasing an apartment building, they calculate the debt service coverage ratio to understand more about their purchase and to find out if it's financeable at a bank. Because if the debt service coverage ratio is too low, you're not going to be able to get financing at a bank. It provides a lender, it lets them know that there's enough cash to cover the mortgage debt. That's the purpose of the metric. So here's an example of a calculation. Let's say that you have an apartment complex, small one that has net operating income of $845,000. It might not be that small actually. And then you've got annual debt service of $758,000. In that example, you would have a 1.1 debt service coverage ratio. So what is the ideal debt service coverage ratio? The minimum debt service coverage ratio is going to be different for each lender. They all have their guidelines, their parameters on what they like to see. But if we talk in general terms, most lenders are looking for a debt service coverage ratio in the 1.25 to 1.5 range. So this means that at a minimum, the asset could produce an additional 25% income after all debt payment. So if you have not seen that metric before, it's one that you should definitely learn. It's an important metric.